All right, what's going on, everybody? It's Friday. Had to be careful because that's not how we say it in my house, and how we say it ain't PC. It's Friday. We'll just leave it at that, huh? I have to go get my hair cut today, so we're gonna shut it down at 4. Right? I don't want to linger too long before the weekend, and we'll go get things started. Right? Like me getting my shaggy haircut, so I don't look like some kind of beach bum. What y'all doing? The base case argument today was for us to go sideways into the close. And so far, that's what we've got. Feel pretty good about that, right? Trying to figure out what kind of day we're going to have before the day even begins. Not always an easy thing to do. So, when we can't do it, at least we just recognize that we can't, like, well, I don't know. It's going to be one of those days, or that we spot it in advance and say, yeah, it looks like a rally day or it looks like a sideways day. Today, it looked like it was going to be a sideways day, and that's what we have. We are inside of yesterday's range, so it's a sideways day. CPRT. Let's take a look at CPRT. Oh, wow. That's a nice tight range, huh? We've got the low and a higher low. We got higher highs. We need one more higher low, which we don't know if this is going to be that higher low or not. We have to either break down and prove that wrong, or run up and break that so that we could say that this is a higher low. But we got almost a full set, right? A full set would be two higher highs and two higher lows, and we've got at least one with one in the works. So that's a good start. It's a trend reversal if we did get that. We can look at the weekly to see if there's like a gap up or anything. This chart don't look right. Let me check my style, make sure we're running. That's what I thought. Let's try that instead. That's how it should have been. Oh, it's because it was oh, it doesn't matter. It doesn't matter. Just save it. Do, 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 do. Save. Yes. All right. Having the wrong candle format will lie to us and tell us that a candle closed at a one side of the candle when it actually closed on the other side of the candle. So we don't have any gap up, right? That would have been really good to see as like a gap up. We don't have one. And we can see that 47 and a half is a serious area of resistance. Every time we've gotten up there, there's just been sellers here willing to whack it back down. And we don't know if there's still a lot of liquidity at that level or not. We won't know until we actually make it through that level and get above it. So I would mark out that spot right there between those two candles and then shoot that across the screen. Put that into next year. We got to get above that level, the top side of it being 47 and a half. If we can get through that, then the next level is going to be 50, basically, right? Getting up into this 49 and a half level way up here. It's another $2 where there was also a lot of sellers present and a lot of liquidity up there. We weren't able to get through it last time. We broke this really big level of resistance back here in 2024, and selling off below that isn't good. When I zoom out, we can see the start of the year, December into January 2020, January 2024, and we got down into that level, but we're back above it. We definitely want to keep that level, last year's low. I don't know if you use yearly charts. Like, this is a weekly, right? Daily, weekly, monthly. People are pretty common with those. But when I mention yearly charts, they're like, huh? What? You can actually make your candles, each candle a 1 year candle, right? I mean, like, who would do that? But if you're dealing with an old company, like I don't know, GE or Corning or one of them ones that's been around forever, it does make it more useful to evaluate things on a big time frame. This broke down below last year's low and managed to get back above it, and that's really important. And it's a good start, all things considered. So, is it going to be able to recover and keep going? I mean, this level has to be fixed. And my concern is if I put a fib on it and run it back up, which I mean, look how broken it is. Even if this is going to go up, it's going to need a lot of time to get that done. It made it into the 111 and it did not make it down into the 1236, which makes me feel better about the reversal because we usually stall at the 111 and we're at that 111. We're trying to get back above it. So that's a good start. From there, whether or not it's going to continue, there's a difference between selling puts and buying calls, right? Um, if I sell a put, I'm basically saying I don't think you're going to close lower than the strikes that I sold, like a 46 strike put, right? Sell a put vertical. It says I think you'll stay above 46, but it doesn't necessarily say I think you're going to run higher. I just think you're not going to fall lower. If you really think this has momentum, then you want to buy calls because the farther it runs, the more money you'll make. That's the way calls really shine in that respect. Butterflies would be if you have a reason to think it's going to pin in a specific area or at a specific price. Big round numbers 100, 150, 200, legacy levels, reasons to believe that it has no momentum, no trend, no reason to move, and that it'll just kind of sit in a spot and let you take those gains with a butterfly. So you want to evaluate where you really get the most out of those three trades. You think it's going to move? You think it's just not going to go lower than X amount? Or you think it's going to pin in a particular area? And then, of course, there's the risk. Which one would perhaps be the cheapest for you or provide the least of monetary risk? If we add some indicators like just simple, simple things like moving averages, I almost said simple moving averages. They're not simple moving averages, they're exponential. And in your picture, you already had it, right? That 200 week, which is a really big deal, the 200 week. We tagged it, we're moving up off of it. I like it even more now because I seen that. And we have the 10 week there. The 10 week's a really big deal. If we can get above that, I will like it even more. But it's liking it from an idea that I don't think it'll go lower, which is different than I think it's going to go higher. We could stay down here for a long time and try to heal from this beat down, right? A lot of stocks get to that 200 week and that's where they stop falling. And they'll sit there and digest sometimes for a year or two before they finally start to work their way back up again. Of course, why it fell becomes really important, right? Like, what was this beat down from? Did they spend a lot of money on something? Did they dilute their stock? Did they cancel their dividend? Right? They got a beat down for some reason, and we would definitely want to know why, because it'll help us understand why we think it might come back up again or when it might come back up again. So there's also the idea of time frame. If I look at, for an example, the 200-day, it is a down sloping 200-day moving average. And that's never good for stability and long term support structure. If we run to the upside, which is absolutely likely we could run, um, it won't stay bullish and it won't ever get back to these upper levels and close this big gap that's up here. You probably can't see because of all those moving averages. It won't do any of that until this down sloping 200 moving average is sloping upwards again. So it would have to get to 200, cross it, get above it, and stretch so high above it that it actually turns the moving average like it did here. It turned that average up because it got so far away, it forced it up. We have a lot of work to do for this to recover and to be a viable play into the 60s and into like previous highs. Just to have a short-term trade to the upside, we could, get into a narrower time frame, something like an hourly or even something smaller than that. We're stuck on the mid of this week's range, this week like this. We're kind of hung underneath that. And when we tried it one, two, three, four times this week, we got rejected. There is a lot of liquidity right there, and we need to get through that. We tried it back here, one, two, three, and then the big smackdown. That was a gapped up smackdown. Tried it again. It really looked like we were going to make it. And then again, this really big bar smackdown. I got to tell you, I don't like these really big bars here on that smackdown. I don't like either one of them. To offset that disgust would be the fact that we are getting those higher highs, right? The one here and even that one there. So it has a lot of enthusiasm on the buy side, but these sellers are they're just mean, man. So looking at it 200 from this point of view, it's flattened out. We still have a lot of work to do. The 200 behaves the same no matter what chart time frame you're on. We would need to get above it, stretch it to the upside, and get it to curl higher. And with that in mind, we still have some work to do. Could take a month or so on an hourly to get that to turn over and point back to the upside. The threat at this point is these really big red bars on the SmackDown, and even the smaller ones. Look right here. There's another big one, another big one. These guys ain't playing around. Another one over here. Until they're done, this could just keep getting beat down. You know, so could look at it and say, all right, well, if it gets above um, 47 and a half and actually closes above it and keeps it, then you'd like it for, a longer term long, maybe like buying calls or something. Otherwise, you could try something cheap, like buying some butterflies, scatter them around 48 or 48 and a half if it has halves on the options, and then maybe pay for those with some short put verticals, selling something like a 47, 46, or if you wanted to get a little farther away, 46, 45. I don't like those out of the money things, but yeah, I mean, people use them, for a reason. Uh, why'd you change my chart, Thinkorswim? Dog. Some of my concerns is that this is an illiquid turd, right? There's no weeklies. That's step one. Um, it has a maximum options traded today of less than 2,000 options. So, you could go in and make book today. You would be the options maker at this point. And that gets scary, right? You might get in, but you might not be able to get back out again. And if you're going to try something like a multi-leg, like a butterfly, you would really have a hard time getting filled in a multiple leg position with this much lack of liquidity. The other part of that is that these are nickel wide increments on a stock that's less than $50. Again, really bad options. You're going to slip to get in and really slip to get out, forcing you very likely to put the longs on first in that butterfly and then add the shorts. And to do that, you're going to slip three times because you have to, buy a leg, buy another leg, and then sell two legs. So that's bad. This is looking less and less like a trade that I would even want to consider. There's so many liquid things that we could trade out there that have a uh, much stronger bias for long, short, sideways. We look at this, we're like, well, I mean, technically I could trade it, but why the hell would I want to? Why dabble in this when there's so many other things that we could trade? That's usually my answer when I find something so illiquid is like, well, I mean, yeah, we could, but I can use a hammer to open, a can of beans. Technically, I can, but a can opener would probably be better. If you want to trade options, probably want to find a stock that has options worth trading. Now, if you have some particular reason, say the CEO, you know they're buying something, you know what I mean? Like if you have some inside reason to want to own this or buy it or take it long, then yeah, heck yeah, absolutely. But if you're just shopping around and be like, I like that chart. I might like the chart too, but I don't like the options. Maybe you could do stock, and then when you bring options into the equation from a stock position, the need for liquidity is not so stringent, right? Like I'm willing to sacrifice a little bit of liquidity if I'm using the options to protect my stock trade versus I just want to put on an options trade. Hopefully that makes sense. Maybe if you do like this space, you would shop around and find one of its peers, right? Like, say this is, I don't know, cloud services or something. I think it's online shopping, right? Like Amazon. So there's other global quote Amazon type companies like Meli and Costco or BJ's. No, not BJ's. Never mind, not BJ's. But what's the Amazon one? Shopify. You could find some other global chain that is an Amazon type company like CPRT that maybe has better liquidity, better chart, better setup, and maybe better options. I don't think they're as cheap as this company though. I think out of the group, this is probably a cheaper one. Meli is nuts, right? Meli is crazy expensive. It's the size of indexes. $2,400 a share. I did like the bounce for sure, and it has potential for a nice recovery over the next year or two. Thinking about building a position there isn't a bad idea. I just really hate their options. Their options are horrible. What a perfect example of trash. Because that, if I was making a video on what not to trade, I would use something like this. When I was a newer trader, this was the biggest gotcha trap that I struggled with. We're always shopping around trying to find something to trade, right? So we look around and we look around and we're doing our research and we finally find a stock that we like and we do our analysis on the candles. We look back, we read about the company, we do all this DD, and we're like, I like this sucker. And then you go into the option like, oh man, dang, I already did all this work. I want to get something out of it. And so you look, you try to get lemonade from lemons, but step one, look at the options. It'll save you from doing all that DD just to find out that it's not tradable. So take your list and go down the names in your list and look at the options on every one of them. I've tried to automate that, by the way, use some sort of scanner to find only liquid options to trade so that names in my watch list are already vetted. No luck there, not using Thinkorswim, anyways. The best you can do is use end of day data. And I've done this with limited success. You go to the scanner. Um, I like to leave my stock scanner alone. So you could just use the option scanner for this. Go to scans, choose options hacker, set this for liquidity like volume, and do it at the end of day and jack the volume up until you don't get any names at all. Right. I think it should be somewhere around like 42 million shares, contracts. Once you get to that level, you shouldn't run into any more names, give or take. And then you'll know that you've reached your limit and then start backing off until you start seeing names, right? Get as many names as you're comfortable with 10 names, 20 names, whatever your uh, comfort level is. So I'm going to go with minimum volume. We'll start with there's 1,000, 10,000, 100,000, million, 10 million, 100 million. Let's try that. Shouldn't get any names at 100 million, right? Nothing. All right. Now we back it off 1 0. That's 10 million, 50 million. Nope. And now just 1 million. One should catch things, right? Like even SPY has 42 million average. Wow, nothing. What am I searching for? Okay, all optionable. That should have popped something. Is it a slow day? I guess, huh? So we'll knock off quite a bit. Now we got a 100,000. That should bring something in. Maybe I better go back to the stock hacker after all. I didn't want to, but fine, 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 fine. Hit reset. See, I think what that other one is doing is looking for strikes that have 100,000. That's not what we want. We want companies that have 100,000 options traded. So go to options filter, set that to volume. This is the only way that I've found something even remotely close to liquid for putting together an options tradable watch list. There's 1 million, nothing. Is it that low of a trading volume day? It didn't seem like it was that low out there. There we go. 100,000 brought up 6 names. So do that at the end of the day. Probably not on OPEX Friday, right? Like do it on Monday or try it a couple days and see if you get different results. We want to dial this back a little more so we get more names, right? So I'll knock another zero off. That's 10,000. That should give us like 25, no, 80. 80 is too many for me. So if we don't want 10,000, try 25,000. All right, I'm comfortable with 23 names. There's a tradable watch list with 23 names. 22 really because Google's on there twice. And it's diversified. I can see we got Mag 7, single stock ETFs, healthcare, brokers like Hood. So some financials are in there, airlines, transportation, semiconductors, cloud computing. It's not bad. Even got a little bit of Bitcoin with Mara in it. So it's diversified. That would be your most liquid options traded products right there. I'm picky, right? And I know I am a little too picky, probably. So if you want to back it off a little bit more, you could just drop that number a little bit at a time until you have enough names that you're like, okay, I've got enough, right? And then from that list, you can start breaking it down into different sectors, different stock prices, because of course those will be cheaper options, right? This EQX, that's a $9 product. It's going to have really cheap options, all things considered. So, you know, if it's Meli, for an example, a $3,000 stock or $2,300 stock, it's going to have expensive options. That way, when you go to look at their stock charts, you already have a feel for, are their options any good? And even with this, the bad thing about doing it one time is maybe they had news. And so some trash company that doesn't decently have options one day had a lot of volume and it showed up in your scanner. And then, of course, you go in and look at the options like, this is trash. It normally has, 2,000 contracts. Today it had 20,000 contracts. It's still not a liquid product just because it one day had options liquidity. So hopefully that helps, right? That gets you pointed in the right direction. Um, I did a video a long time ago about going to bigger research, right? And by bigger research, I mean, where does the options data come from? CBOE. And the CBOE offers all sorts of stuff for free. They will give you last month's highest traded stocks by options volume. They'll give you last week's highest traded stocks by options volume, all for free, right? You don't have to buy anything. And if it's not from them, because they do have really great stuff, but they also have things that they want to sell you, you can go to the CBOE, but you can also go to the OIC. This is the Options Industry Council, and they've got education, volume. No, it's well, it depends on what you from the CBOE. They do have like tools that you can download as a platform. They do have that, right? And that's not free. But the CBOE has options volume like spreadsheets or just data. That's different, right? That's free stuff. If you want legacy volume over the last day, week, month, you can get it from the CBOE and it won't cost you anything. It's just a download, right? But if you want their live options scanner, then yeah, no, that's not free. That's a completely different thing. So they have retail tools that you can pay for, but they also just have options volume data like yesterday, last week, last month. That's free. And if they don't have the free one, then it would be the OIC that has the free one. But I've done videos on how to get free legacy data like last week, last month, highest traded options volume. You can get all sorts of stuff from the OIC when it comes to that sort of material. All you got to do is look around. These guys have education, background, um, volume metrics. When when you're a coder, if you want to have a website where people can, search for call volume, put volume, whatever, and they're looking not at today's volume, but like last week, last month, historic stuff. A lot of people use OIC and CBOE, and uh, they don't have to pay out the nose for it because it's old data. Now, live data, that's completely different. So there's also one more. There's the CBOE, the OIC, and then the OCC, the Options Clearing Corp. Which I got to say, their website looks very much like the OIC's website, and I've often gotten those two mixed up. But the OCC, the OIC, and the CBOE, all three of these guys, you should shop around and look at the free stuff that they have to offer. They are excellent resources, free and paid, right? We have enough stuff that we can go buy nowadays. I probably wouldn't buy their live vol product, but I have sent clients here for like options info, questions that they would have about using different strike widths and assignment metrics. It's a good place to go for that. Yeah, the free email. Let me get the name of it. It's only going to be free until September 15th, which I did not know. I thought it was just like something that they were offering for free forever. But Spot Gamma has an email that they're sending out every day for free, and it's called Flow Patrol. So let's see if I could find that link. No, I'm not finding it that way. I'll have to find it through I've got the email. I'm looking right at it. So let me see if their email has a link in there to get others to sign up. This is going to be one of those long links, but uh, okay, it's a long link, but click it. I'm gonna click it, and we'll see what we get out of it. It should have went to this page, and it didn't. Let's try it again. There it goes. So you will get this today, right? But today is not just the issue. There it is. Scan that, right? That's how you can sign up for it. There's your sign up link. For anybody watching the replay, just scan this QR code. So this report is pretty awesome, but it is really heavy on the options talk. So if you're not fluent in option nerd talk, you might struggle a little bit. The thing is, you can take it and give it to AI and ask AI to summarize it and give you, the relevant takeaways. Like, it's not worthless. It has some really good ideas in there. I've been posting some of the bits and pieces of it into the chat. Yeah. Like Mara today was on here, right? This position, they closed out this. So they had puts and two sets of calls. They closed it. We can see the C letters over here says close. And then they opened this new position with this put and those calls. And what it looks like is that they were selling a call credit spread to buy puts. And that kind of, if you go in and look at the options at this strike, the 822 expiration at these prices, that 14 strike had like 50 something thousand and would make a really nice support level and a price target like a magnet for Mara. 822 14 strike Mara. So I built a double diagonal to take advantage of both sides. Here's the 14 strike, 53,000 in open interest. No real volume today, though, right? They did all that work yesterday and now they're just living the dream. And then on the other side, it was what, 16 and 16 and a half, I believe. Yeah, 16, 1650. So that's the other side. And I thought, well, okay, it's not bad. 81,000 contracts on the call side. That would perhaps act a bit like a magnet too. And so, maybe it doesn't reach the 14 and maybe instead we go this way. And I thought, well, I don't want to guess, right? So why not just put a straddle around it and not an actual straddle. I don't want to put a straddle on, but why not put a collar on it or a range, a necklace, so that if it goes up, we're good. If it goes down, we're good. And I came up with this. If you look at the break even on this thing, it's around $15 on the downside and 16 and a half on the upside. As long as it stays within that range, then you make money. The problem with this trade, even though it opens for a $7 debit, is it's about a 1-to-1 in the risk to reward. It's risking 55 for a chance to make like 45 max. I don't like it, right? I don't like that risk reward metric. You could try butterflies. They'd be really cheap. A butterfly on the 14 and or a butterfly on the 16. And then of course you could try something like an iron condor or something, but I don't think there's going to be enough volatility to give the trade any juice. An iron fly is what you could try. There's a 16, try something like an iron fly like that. But this again is risking 70 to make 30. Oh, my bad. No, it's not. That's risking 18 to make 32. But that's a really tight range too. That suggests that Mara doesn't go anywhere, right? Which is, you know, it's buffeted next week with an 80,000 upside on the calls and a 40,000, 53,000 on the downside of with the puts between 14 and 16. It's $2 range. It's what we've had This is $2 range. That's the wrong one. This one. 14 to 16. But see, 14's a long ways off, right? We've been doing like 15 to 16, and their positioning says they think it's going to go to 14. That's a short-term trade they put on, right? They don't normally put on short-term trades. So when they do, they've got bias, and that's what it looks like. But they did that last week, and it didn't pay them, right? If you go back and look at the report, they were closing one that they had already had on, and now they're just doubling down and putting it on again. So, it doesn't mean they're right. Just means they're willing to risk it. But this also does sector analysis, which I thought was really cool, and directional positioning because not all of us like to sell to open options. Some of us just want to buy calls and buy puts. And then, of course, they did gamma positioning, volatility positioning, the biggest premium trades, which, you know, depending on how you want to read that, that would be your premium trading, selling to open, collecting a premium. But it can also just mean that's where the largest amount of premium was spent on those trades. Like, look at all those calls. They're just buying calls like crazy. Significant bullish bets, notable bullish in the money calls, index trades, UOA positions. So I thought it was a pretty advanced and detailed bit of information, especially for free, right? I mean, that's fantastic. But unfortunately, it's not free forever. So I'm going to get access to it, but I have a subscription to them, or at least I have access to somebody who has a subscription to them. Still, get it while the getting's good. Nothing wrong with that. Yeah, whenever you think of SMH, you always do want to think of that from a broader perspective concept, right? Never as its own individual thing. And so when you think, what do you think of SMH? It's what do you think of chips over the next, day, week, month, whatever. And don't let Intel fool you. It was up today, but all the rest of them were down. We're not done with chips in the grand scheme of thing. I think we're all comfortable with that because AI is not going away and the demand is still there. So the problem is how much money these companies are spending and investors getting upset with them over their spending limits, how much they're really putting out there. So with that in mind, we look at SMH, kind of try to evaluate. So what are we going to do from here? We're on the 10. That's the 10-day, and we need to hold that or we're going to 20. I can try to guesstimate as much as anybody else whether or not it's going to hold or if we're in some sort of sector rotation. If the market goes, the chips are going to go. Right. So evaluating SMH at this point is basically evaluating SPY and QQQ. But on the other hand, whatever happens to this is going to happen to the indexes. So either SPY and the Qs go down and it whacks this, or this goes down and it whacks them. Otherwise, we're going to continue to go up in all of it. Now, earlier today, I went through my charts like I do every day, and we still do not have short signals. So if we look at this, this is NASDAQ net buying versus net selling, or it's the, like the total volume aggregate. They're still buying even today. Down day, all this negativity, they're still buying. So if the NASI is still bullish or bullish volume, no short signal. The credit adjusted spreads still low, so no liquidity issues with the Fed, the government, anything like that, and firms and borrowing money, and no issue there.
Now, wait just a minute.
What's up?
You know, you remember that experiment about a mason jar with a rubber band across there and a balloon on it and a little straw there, and it acted as a barometric pressure monitoring thingamajig? Well, you see, I've been using that, and when it goes down, the markets go down. When it goes up, the markets go up. Well, today the whole damn thing broke. So I don't know what that means, but
I'd say we just flip a coin. RSP, which is the weighted versus unweighted here, this is still within its normal trend. So we don't have a short signal in the markets on that. This is the QQQ version, and we also don't have a short signal on this. This is like my mass tech tool. If this is bullish, then you should stay bullish in broader tech stocks like the Mag 7 group. This is still green. Granted, it's on a monthly, but it's still green and it's still in the upper part of the 50% of this candle. So no bearish short signals there. Now, supply and demand is different than growth versus value. And in the growth value space, on the IWD version, which is good for Mag 7 and tech, 120, 222 is the line in the sand, and we're still above it. We have a little drawdown, but we've had those drawdowns all the way since back here, right? We've been doing that same thing, still in a channel. It's not broke, no short signal. This one on the right, which is more of my generic broad growth versus value, did break down through the year-to-date VWAP. This is saying proceed with caution, but that is different than, hey, you should short the market. So no short here. And the reason I'm looking at all of these is because if we're going to look at SMH, we have to have an idea of, well, what SPY and the Q is going to do, because SMH is the Qs and Q is SPY. They are all three the same thing. If one goes down, the other is going to go down. And if one goes up, the other is going to go up. So there's no short signal here. Not short doesn't mean long, though. We could stay sideways, chop out, just not go anywhere. And if we have reason to believe that we're going to be stalled out, then we'd want to do, short sells like short put verticals, short call verticals, things like that, iron condors, maybe some butterflies, and not buy calls or not buy puts. So this is the 30s, US 30 versus JP 30. It is very similar to the market itself. And when this goes down, they go down. When this goes up, they go up. This is weak on the hourly, but look at the daily. I mean, it's still sitting up there. It hasn't even fallen down yet, just flattened out a little bit. There is a little concern over parity, I guess is the word for it. I'm going to use my drawing tool here. The blue line is basically lined up so it's just in this box or in this channel. If you look at the orange line, that was a breakout. And if you look at the cyan line, that was a breakout. So the Qs breakout, S&P breakout, the 30s didn't break out, and they stalled against that potential breakout spot. So if they don't break out next week, the S&P and the Nasdaq could pull back to the breakout points, and this could fall down. That would stall us out in the S&P and the Nasdaq, but it wouldn't necessarily give us a short. It is all going to come down to how this potential reversal unfolds to define whether we should put on a short call spread or if we should buy puts. And at this point, we don't know how it's going to manage that, right? We won't know until next week. I thought it had stopped on the line, but you can see it actually did get a little bit of a breakout. If we come back in, these will likely come back down, find their previous support levels. And if we wanted to see what that looks like, we just go to the SPY chart. We're talking about the SPY breakout point. So that would be back here, 639 ish. It'd be the top of that range. Yeah, 639.85 for SPY. And 575 for the Qs, which the Qs are almost already there, really making me think we're going to just get that bounce on the 10 and keep right on doing what we're doing. We still just don't have a short. If there's no short for the broader markets, there's no short for the Qs or the chips. But a short's not a long, right? It's just not a short. The 10-2 spread, we're getting a breakout of this weekly range that we've been chopping around in forever. This is what they would call a bull steepener after a bull flattener. I don't know why they use that silly language, but that's bond markets for you and yield traders and just, I don't know, it's silly. I don't like it, but whatever. That doesn't support a short in the market either. This is like some backwardation models or VIX models. We're at a common reversal point. So we would have expected already for the SPY and the Qs to take a little bit of a digestion. We overshot the level, but we were coming into the common reversal point. So they like kind of expected that, and we're getting it. As for contango and backwardation, we're still in contango, no backwardation in sight. And there's not a broad market short until we break 1.18 to the downside, which we have a long ways to go if we're going to do that. So no short signal there. And DEX is still way down here. So nothing there yet either. If you come back to SMH after all of that, right, run around the block, what we come up with is we don't have a short signal. And at this point, your safer play, let's say it that way, would be to either put credit spreads or long plays. Going long here and now would be as frustrating as it would be to go long in anything else at this point that's already run so far to the upside. It is setting higher highs and higher lows, right? Got the high, higher high, and then we had lower lows, but then we started building higher lows again. We don't know that that's a higher low yet, by the way. It could just fall all the way down and then it wouldn't be a higher low. 300 butterfly, or like 295, 290 short put vertical, something like that. It would straddle the 20-day moving average for a support and for your break even. That's only 7 days out. Let's give it a little more room. 35 days out, 290, 295, which is just slightly out of the money. $2 on a $5 spread. It's not bad. Break even on that would be that the stock needs to stay above 293.05, or at least close above it by expiration. Yeah. With the super high IV, you're better off selling to open than you are buying to open, right? So there's a question about the dome on Thinkorswim, what is often called the active trader. And unfortunately, I think what you're going to find is you're not going to get what you're looking for, right? Thinkorswim does very little when it comes to differentiating between the types of trades that were done, especially when it comes to their bid and their ask. The Thinkorswim just it leaves that to Bookmap. Let's say it that way. It's not that they don't do any work on it at all. It's just that they have a Bookmap and they know it, and so what you're looking for, it's very likely they're not going to give it to you because, well, they want you to get Bookmap. I am waiting for this to update so that we can see it. There should be volume here and trades here, like a big volume profile, and it's not updating. Come on, do it. Maybe we can help it out. Or maybe I have to go to a different time frame. There it is. All right, so I'm gonna give the guy a few minutes to see if he shows up. Otherwise, I will answer him verbally, and he can just catch the replay because I don't want to do all the typing that it's going to take. There's a question in the questions channel about the different coloration here in these blue bars on the active trader, and their question was, "What are the different shades of the volume?" When I did some research on it, there was not a lot of public information on this. Thinkorswim used to have more public information when it was owned by TD Ameritrade. Now it's owned by Schwab, and they deleted a lot of that stuff that was in the public space. And they have some vague answers for things when you go looking. So sometimes you just don't get good answers. He did reach out to support, so maybe they're going to give him the answers that he's looking for. What I found from looking around was that the different colors differentiated where different parts of the day were, right? So if you're uh, moving your mouse over the candles at different points in the day, say, let's see if we can get somewhere near price, that there was a high volume level, like around the open, of course, because we'd have a lot of volume at the open, and that there's multiple color levels because of that. Well, he didn't like that answer and was looking for more answers. And what he said in the chat was he's looking for a differentiation between buying volume and selling volume. And the reason I didn't want to do a bunch of typing to answer that question is simply this. Uh, the only qualification that we have on brokers a lot of the times to define whether something was bought or sold is how much was paid for it, what the bid versus the ask was. So when traders hit at the bid and above, or I mean, at the bid and below and at the ask and above, that shows us their aggression and whether or not it was sold to open, sold to close, bought to open, bought to closed. If we're just going to depend on the broker to tell us if it was buying volume or selling volume, most brokers are not going to do that for you. Thinkorswim will defer you to Bookmap if you want that sort of information, right? If I'm really positive I'm going to say this, and if I'm wrong, then I'll eat that. But I'm almost 100% positive that this is not differentiating between buying volume and selling volume. Now, I've got a generic tool in my Thinkorswim workbook that focused on buying volume versus selling volume. And while it's not perfect, it does a pretty good job. So let's see if I still have it. I wasn't sure I still had it in here. That's not the one I'm looking for. So off to Thinkorswim we go to the workbook. Do 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 do. Get that out of the way. It'd be a lot better off. My volume collection should be an entire channel on nothing but volume. Buy versus sell right there. And I will load this live so we can all see what I just shared with him. Go to setup, open shared item, paste the link, volume buy sells, and then we load it. And you get something that looks like that. Now I know at some point I went in and I added labels that said how much of the current bar was buying, how much was selling, and then on the previous bar, how much was buying and selling. I don't see those labels here, which tells me this very likely isn't the one that I went in and did that extra work on. But obviously, it wouldn't take much to put it back in there again. And check the workbook. For all I know, it was in there already, and I just didn't see it, and I grabbed this one. But there's your buying versus selling volume. Also, another thing about buying versus selling is that's what we call cumulative delta or volume delta analysis. So you could look around for delta volume tools, which I happen to also have one of those lying around. But be mindful, it works the way that TradingView's delta volume works, right? And if you don't know the handicap on that, I will fill you in. It's not horrible. It's just, there is a handicap. So as long as you're mindful of it, you're okay. The handicap is Thinkorswim and TradingView do not have the granularity to actually check when a trade was placed, if it was hit at the ask and above or at the bid and below. So they don't. They don't even bother. What they do instead is they look at what your time frame is and they go below your time frame and look at how the candle closed. If the candle closed green, that was buyers and buy volume. If it closed red, then that was sellers sell volume. So if I'm on a 15-minute, it has 14, 13, 12, 11, 10, 9, blah, 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 all the way down to a 1 minute. But if I'm on a 2 minute, it only has 1 minute, right? Thinkorswim doesn't give you seconds based charts. So you want to be very, very mindful of the time frame you're on when you go to use that sort of an indicator, because when it looks lower, it's only going to get so much. And it is making an assumption that the red bar was, quote, all sell volume. We know that's not true, right? We know it was a mix, but that's how it's going to read it. And so I do have a delta volume tool somewhere. I'm looking around for it now that I've shared before and I'll share again. But, that handicap does exist. There it is. So this, I'll just throw it right into the chat. This is a text document, which means it very likely just has the code itself. And you can open the text document up, put the code into a new indicator. I don't know if I want to trust that, Marziti, but you know what I mean? Like, I
Well,
don't
I
know.
mean, Grok does have a PhD.
Yeah. And I've seen Grok get it completely wrong, just like any human would too,
Well, just
right?
remember that PhD stands for piled higher and deeper.
Right. Everybody makes mistakes, and even AI can. And hey, if I'm wrong and this is showing a differentiation between bid and ask, and at the bid and at the ask, and above the bid and below the bid and above the ask, then that'd be fantastic. But I don't believe that to be true. I've used Thinkorswim for a long time, and I just don't believe that it is has ever made that distinction, and I don't think it's going to start now. But if I'm wrong, I will be happy, right? That'll be a good thing. If I'm wrong, that it's good for all of us. I just don't think I'm wrong. So what I shared in the chat was the CD, the cumulative delta for Thinkorswim. Um, you should be able to open that up. Let me actually make sure it was Thinkorswim in that trading view. Yeah, it's Thinkorswim. You should be able to open that up, copy the code, create a new indicator with it, and apply it on your Thinkorswim charts. And that'd give you cumulative delta, which is buying volume versus selling volume, all things considered, right? Yeah, because if you think about it, TPO, time, price, opportunity, is how many trades took place at that spot. And a TPO profile looks very much like a volume profile, right? In the morning, I show this chart every day, right? And it's got that profile in blue and this one in green. Well, it's not two volume profiles. The one on the right is TPO and the one on the left is volume profile. So TPO is basically how many trades took place at that price and then how much volume was in that trade. Because we can have 5 trades with one contract each trade, that's one for one. But if we have 5 trades and 3 of them was 20 contracts and 2 of them was 100 contracts, well, now we had a lot of volume, but only 5 trades. So if we go back to this chart, this says 343,000 contracts traded at that price, but there was only 2,300 trades taken at that price. So there was a lot of trades here that had multiple contracts in those trades. And this is SPY, so that's SPY volume, right? That's stock volume. That was rude. Did you see a glitch? That's not nice. Thinkorswim just being janky. So yeah, 2,000 trades with 483,000 shares traded in those 2,000 trades. Pretty cool, huh? That would be TPO, basically. We're very likely not going to get that kind of granularity here on the ES. I guess we are. I wasn't expecting it. But we're not getting, like a full dome the way I would if I turned on my Tradeovate, because I've got full book on Tradeovate.
Austin, Tradeovate has an equities subscription that you can buy. It's $3 a month, and you can pull up tickers. But as far as I know, and I could be wrong, it's a futures only platform.
They sent me emails about free stock data. You just have to get it. I tried over and over and over again. They're like, submit your email address and we will sign you up and you'll have free equity that you can, chart Apple and whatever. Well, I've tried so many times and it always gives me an error and I've never been able to get it to work. But Tradeovate does supposedly offer equity data volume or equity data charting. I've just never, ever been able to
Yeah,
get it
but
to
why
work.
would you want to chart anything on Tradeovate?
If you're already
Yeah,
there,
well, I know, but you know the quirks and the crap issues with Tradeovate's charting. NinjaTrader is not a bad alternative there because NinjaTrader can also tie into other brokers, and they honor the discounts that you, whatever your pricing plan is on Tradeovate. So, like if you have the monthly subscription to get discounted, further deep discounted option trades, commissions. Switching over to NinjaTrader gives you a platform that charts not as easily as TradingView, but it's accurate and ties in 100% to Tradeovate, so it's not bad. The in that regard, there, the but NinjaTrader can also tie into Schwab, and I think they can try and tie into E-Trade. So supposedly you can do some trading and stuff like that through NinjaTrader that way as well. And there's no additional fee to use NinjaTrader because NinjaTrader bought Thinkorswim. So since it's now the same grouping of servers, it's just a difference in software platform. One is rather technical like Thinkorswim, and the other is very easy, user-friendly like Tradeovate.
so I just pulled up Apple on Tradeovate, and it is delayed data. We can see the D data is delayed, but like I said, I was never able to get it to connect. I think if you go to the Tradeovate website, you got a chance to try to sign up for it. Maybe you'll have better luck. The reason that I have failed with this is because I do not have the two-factor authentication active on my Tradeovate. Because when I run it all through Jigsaw, it's just a big mess, right? So I don't have the two FA, and because I didn't have that, they threw a fit over me trying to do the sign up on the email. It was a big mess. So I just say screw them, and they said, yeah, screw you, and we both agree that I won't get their equity data. Fair. We're both in agreement, right? That's out.
Well, Austin, one thing you can do if you want to kind of learn the idea of day trading futures without actually trading them is to learn to trade some smaller scaled stocks, some $5, $10 stocks. I'm not talking penny stocks. I'm not talking about $1.50 stock because they have absolute chaos in their charts a lot of times. But you could trade a $5, $10 stock just to get the idea and the comfort level of what it's like to intraday trade with futures, because the difference with futures is going to be that everything's going to be multiplied. So it's the same charting trading concept. It's just there's a different multiplier. If you've got stock, the multiplier is one. It moves $1, you get $1. In futures, it can be 20 to 1, 50 to 1, whatever. But like I'm saying, if you want to learn that intraday stuff, then start on some $10 stocks and just buy one share. Obviously, it's not going to go to zero on you, and even if it does, you're out $10. But it would help you develop that strategy, that mindset, stuff like that.
And Austin, I don't just trade stocks and options. I trade futures, stocks, options, options on futures, and FX. I trade nearly everything. I don't do CDs and I'm sure there's a few other things that I don't trade, but yeah, I trade futures. I just do it in the morning and then I'm done. Or I might come in the afternoon and trade futures. I don't trade futures between 9:30 and 10:30. That's my number one will not do. And a lot of times I won't trade it through lunch either. So by the time I am willing to trade futures, we're already in the afternoon. I get my futures trading done before I do the morning stream every day. I'm day done before the 9:30 bell even rings. I'm already done for the day. Anything extra, it's just extra. Stocks and options is what I do with the money after I've been trading futures. Put it into longer term trades, and make my money make money.
Yeah, yeah. So, Austin, let me add one other thing to you there as well. If you do decide to go look at some $10 stocks, make sure they have at least 1 million share a day volume, at least 1 million share a day volume, so that you actually get a tradable stock that people are actually trading. And I would tell you there are several there at 2, 3, 4, 5 million shares a day. And that's even better. And that's going to be more like trading the futures. Because the futures, I mean, the ES, the NQ, gold, they've got, lots of volume, hundreds of thousands of shares or contracts a day. So you want to trade something comparable in that regard there. And, it's the same setup. It's just a difference in the multiplier.
So to that point, I just ran a scan and said, show me all stocks that are between $3 and $12. And we got 2,700 stock, right? That's too much. You'd want to narrow that down. Market cap is a good way to go. Daily volume is a good way to go. So, I just loaded market cap. We'll put a min number on here until they all disappear. And then we'll know that we went too far. Right now, I just put 10,000 and I knocked it down to 233 stocks. You could also, instead of doing that, you can say you want to intersect all stocks with something like the NASDAQ 100, or, something that's just US only. So, NYSE stocks, NASDAQ stocks, right? You could do something like that. You can exclude all ETC stocks or OTC, which might be a good way to go. That way it just gets them out of there. So if I exclude all of those, we're down to 52, right? Now we've got American stocks that are not over the counter. Well, I guess they're not all American. Some are Canadian, but they're not OTCs. We've got decent volume, right?
Wonder if selecting optionable would filter out the foreign stocks.
It might. I mean, it certainly wouldn't hurt. Just trying to help narrow it down some to get rid of the trash, right? Yeah, now we're down to 30, and I still see a few names in there, but no, nothing. I think these are all tradable. We could probably knock this down now from 10 to, let's try 7. Six more, 6 more names. That wasn't very helpful. Okay, so we don't need market cap anymore, it seems. Oh, yes, we did. Yeah, we did.
What do you think about adding IV or H historical volume in there to help find some movers?
We'd have to do it through indicators, huh? I was hoping to leave it just on stock stuff so that if he's on paper, because remember, he can't scan indicators when he's on paper.
Oh, well, I mean, I can always find the list and send it to him.
Yeah.
Give me a moment.
I'm going to put market cap back on, but drop it down to 1,000 market cap. That's 260. It's a bit much still. So, okay, 130 names right there. That's not bad. That gives you things like Ford, AT&T, right? That's a lot of names. 250 is a lot of names. But this would be your basket. And then from that basket, you would start to pick and choose bullish names, bearish names, names that are sideways. names that could be breaking out into new highs, reversals off the lows. It would give you a shopping point. So I don't know if you see the setup that I have here. It's stocks greater than $3, less than 12, with a market cap of at least 2 million shares, 200,000. It adds the zeros for you. You don't have to add that. So 2,000, and then exclude OTCs, all optionable, and all stocks. And I can save this. And then I can send you the link and you can just import the whole thing. There you go. Now, the thing about trading it, um, I'm a big believer that you cannot paper trade your way to success, right? That is just my opinion, and it's not a popular one. But if you sat here for the next 5 years paper trading every day, you would not be a successful trader. And I know that's not popular to say, right? But that's just the way I feel. The only thing that's going to get you to become a consistently profitable trader is education. So researching candles, candle patterns, setups, understanding what moves price and why price is moving today, this week, this month, understanding market dynamics. That is how you become a consistently profitable trader. Learning to gather data, make an informed decision about that data, and then act on the decision that you've made. That gets you to become an active trader with a consistently profitable track record. So you don't want to get hung up on trying to paper trade every day, thinking that it's going to lead you to success, because it won't. I've never seen anybody succeed from paper trading. It comes from education and then applying what we learned in paper trading, right? So obviously we need paper trading. I'm not saying it's worthless or that you won't get anything out of it, because that's not true. You do learn things from paper trading, especially like how to use the broker, how to put trades on, how to work the order, how to take them off, how to adjust a trade when you're in it. Those are all really important things, but none of those tie into where's the market going now and how can I monetize that. Paper trade until your fingers fall off. It won't teach you how to figure out what markets are going to do next. Education does that, and that's what we all struggle to learn: is what is the market doing now, what's it going to do next, and how can I make money on that move. That comes from education, not from paper trading.
And that's a very good point, also, because I'll chime in on that because we always have this discussion about paper trading. I've been, a lot of people know that I will say that you learn to execute your trade on paper and to work out the kinks of it. Now, Signet is right. You still got to have a good strategy and you still got to do that education. So you do some education, you pick one or two strategies that you like, you paper trade them to try and fine tune that muscle memory on you as far as when to take it, when to not. And then you stick your toe in very lightly into live trading, because paper trading helps you with the muscle memory, if you will. Live trading helps you with the emotions involved when you know you have real money in the trade. But Signet's correct. You've still got to have that education. You can't just sit there and stare at the chart and figure it out. Trust me, as I spent years trading, losing my butt, a death by 1,000 cuts, until I found the bullish bears and learned about something that we talk about here called price action. That was an absolute game changer for me.
Yeah, that's the world of difference. I know successful traders who use indicators, not price, and they do just fine. It's not to say that you have to only do one or the other, right? But um, most of those indicator traders that I mentioned, they don't understand the days that it don't work. They really don't understand those days and they get frustrated, really frustrated, where they're just like, why is my signals not working today? And they get their butt kicked those days. But on other days, they do fantastic, and they just suffer through those bad days. I would rather understand the why, right? Why is an indicator going to work today? Why is it not? And then, I mean, I don't use indicators anyways, but you know, I want to be able to read price. I always like the analogy that, the market is a story. And if you can read the candles, then you can read the words that are in that story. There's two kinds of books out there. There's National Geographic with a bunch of pretty pictures. That tells a story, right? And then there's the other kind of book where it's, like an encyclopedia and it's got a bunch of words in it and it has very detailed descriptions of what's happening. Well, that also tells a story. So if you can't read a candle, you're running National Geographic, you're just looking at the pretty pictures trying to puzzle out what's going to happen next. But if you can read the candles, then you can read the words and you can get a deeper understanding of the story. But having the why behind price, that comes from education. Why price is moving, why we think it's going to hold where it is, why we think it's going to go somewhere next. Like the ES moves up, the ES moves down, not because people are trading the ES. I mean, some, yes, but not all of it. The ES moves because of commodities, treasuries, bonds, yields, Apple, right? So we have to try to figure out every single day what's moving price today. It may be different than what was moving price yesterday, and it will very likely be different than what's moving price tomorrow. So every day we have to figure out what's moving price today. Is it going to stay like that all day or will it swap? Because it won't stay all the time. It'll be multiple things through the day. Which one is more important at the moment? And still, why do we think it's going to do what it's doing and where's it going to go next? And paper trading does not give us those answers. I've been working on beginner education material all week because it is the most missing, it seems. We've got a really advanced options education center uh, in the Bullish Bears. I know because I made it. The next level library in the advanced options. The problem is it's really advanced. And most people tell me, I don't understand what the hell you're talking about. But there's a lot missing on the beginner side. And it's not to say that, the Bullish Bears is doing something wrong. It's just that there's so much beginner stuff. You can't cover it all. You just can't. There's too many things. But there are some big gaps that I've been working on putting together. And it's not all just trading stuff. You know what I mean? Like the things that are missing are the things that we need to prepare traders for how to trade. I see people that show up who can't use Google or YouTube. I mean, if you can't do research, you're not going to become a successful trader, right? If you can't go out and do due diligence, you're kind of screwed. So you have to learn how to even do research. And then there's traders that I see show up that barely understand how to run their computer. They're like, everything about trading is digital now. You have to be good at apps, software, your computer, passwords, email, logins, Discord, social media. And if you can't run those things, you got a real handicap compared to anybody else who can just fire up a program, look at it for 20 seconds, and start putting trades on. Yep, yep. You have a good weekend, buddy. I got a half hour and then I'm going to go because I got to go get my hair cut today. So things like, basic learning mechanics, learning how to learn. It sounds funny, but a lot of people don't know how to learn. They they weren't taught that in school. Basic software uses, basic applications that we do use, market concepts. It sounds silly, but those are missing pieces. What broker to use, what browser to use, password managers, email managers. So that's where a lot of my week went. Working on my conviction courses. Is what I call them. Oh yeah, at some point we got to go out there and get bloody for sure. Um, when I started, I had Robinhood and $300. That's it. A full-time job while I was also in college full-time with a 1 hour drive to work and a 1 hour drive home. That that was my life when I started trading. 12-hour days at work. No idea, since I came from the oil field, how to do anything with trading. Swinging a hammer and working on the rig does not prepare you for running a computer, sitting in the office looking at a bunch of numbers all day. JOBY blew up this morning. I never even got a chance to look at it, but I see it didn't hold. So we gapped up and then down we went. That's an outside bar, 100%. Bearish engulfing. Not cool. There was a nice gap up in the pre-market though, and that range has been holding steady. Might not see it, but there's a head and shoulders there. That's not good. But it's a weekly or it's a daily, and it came from this flat zone. There's the left shoulder, head, right shoulder. Not really impressed with it. You know, the shape of the pattern matters. If it's a really ugly pattern, the follow through is less likely. And I'm not really impressed with head and shoulders to begin with, but it is there. As a company, these guys really impressed me. JOBY. They're over in the United Arab Emirates. For a while, they were the only company over there. Now they have some competition, but they're building out the entire infrastructure, so that if anybody else comes in with air taxis or wants to do, vertical takeoff, landing, mobility, they'll be using these guys as charging stations. They'll be using their docking stations, all of that, which I think gives the company a bit of a leg up. But EH is another drone company, and these guys are running in Brazil. Both of them are in countries that they're not from. EH is a Chinese company. They're in Brazil. They're doing taxis for vacationers, people that want to go sightseeing in Brazil. They fly around this volcano and a couple other places. I think it's a dormant volcano. I don't think it's live, but they had exclusive rights down in Brazil. They were the only company there. Now I don't think that's true anymore. But they were building out all of the ecosystem for air taxis, and anybody that wanted to go down there was going to end up using their services and their stations. So both of those jobs had a 5-year contract. By 2030, we should see them operating in the United States if they don't kill anybody, right? Like, knock on wood, everything's got to go good for the next 5 years. No major crashes, and nobody gets killed. No Boeing style incidents where they're killing entire families of people. And if that happens, I think we're going to start seeing air taxis in the U.S. dominantly, like in New York and LA, places like that, where it's really congested and traffic sucks, where they can just hop in it and jump from building to building or jump across town, little short flights, go out over the bay, get onto Manhattan, get on the island and back again. That'd be pretty cool, huh? 5 years ago, people talking about that, it was like, whatever. This ain't the Jetsons. You're not gonna have people flying around in cars, and yeah, we're almost there. Almost there. So this whole list is drones and drone services. Um, some of them is satellite, or maybe drone parts and pieces. A little bit of this is anti-drone. They're not all U.S. companies. There's Chinese companies in here. There's a couple of penny stock companies too, but I don't really mess with those. That would be pretty cool between Tampa and Orlando. What's the distance on that, right? Because jumping from building to building is completely different than jumping from city to city. Then you got to worry about, more of the uh, flight plan, weather. Still is pretty cool. And on the same vein, there's a semi company that does shipping of like goods, dry goods, bulk goods, boxes. They're traveling from Texas to Oklahoma, semis on the interstate, running up I-35, driverless semis. Everything of that, right? Talk about dropping the cost of goods and services. If we can ship semis all around the United States and they're driving themselves, shoot, freight's going to get a lot cheaper. One of my coaching clients told me about it. It's a small company, but still, it's pretty cool. The thing is, when you look at those, there's big companies that do it too, right? Like Google, Amazon, so then you find a little company like EH or Joby, and it's like, how are you going to compete with Amazon, bro? Yeah, like um one of my kids, he's a semi driver, you know what I mean? Like he's a over the road truck driver. I'm sure he doesn't want to hear about some semi that can drive with AI putting him out of business. You know what I mean? Like that's how he makes his living. So it is scary. Times are changing, but the cost of goods and services will go down, hopefully, if we don't have that manpower behind the wheel. I'll tell you the one that scares me: quantum. Quantum is the nuclear race right now. Like when they were all trying to split the atom back in late 30s before we got nuclear weapons, everybody was trying to figure out how to split the atom and fire off a nuke. And the first one that did it won. That'd be us, right? So this quantum issue is exactly the same thing. Whoever wins it is going to have 100 years of dominance. We've been dominant since 1942 when we hit Japan. Whoever wins the quantum one, they may be the winner. I don't know what would be stronger than the quantum one. Of course, 100 years ago in 1940s, we didn't know what would be stronger than a nuclear weapon. So, I tried to. I've tried to teach all the kids about trading, and it didn't stick on any of them. My daughter got into college on math, so I mean, she loves the numbers, but doesn't like computers, doesn't like stock trading, doesn't know anything with stock at all, none, and doesn't like computers. And if you can't run computers, you can't trade. I mean, I know an old guy that calls in all of his trades to a broker. To this day, he still calls in trades. But the rest of us, you know what I mean? The rest of us we got a trading app. Speaking of apps, Do you guys ever get on your phone and go to like the Google Play Store or the Apple Store and look at options apps and stock apps and things like that? I have found some really good macro data apps, some of it free. There's a broker that does a macro analysis and it's on my phone, right? Like it's not even a computer app, it's a phone app. And then there's good government apps that you can get for free too to keep track of like the GDP um, revisions and that sort of stuff. So this macro one, let me bring it up so you guys can find it. ALLIO. It's purple and it has like a set of round Jim Morrison style sunglasses as its icon. And they've got a lot of macro stuff. Let me log into it, make sure it's the right one because I got three that I was going to tell you guys about. Yep, that's the one. It has the macro stuff in it. So I'm taking a picture of the screen. I'll just put it in the chat for you guys. Alio. And once you get logged in, like I just logged in, it's free. It didn't cost me anything. If you scroll down after you get logged in, you'll see it has a macro write up, which is fantastic because that's what a lot of the swing trade work that I do, it comes from starting with the macro side of the analysis. It says macro overview, right? Down there at the bottom. And what that'll do is it'll send you out to another page and it's a write up like a PDF document. Somebody sat down and wrote up this macro backdrop. It's fantastic. There's all kinds of apps out there that can help streamline your information processes, and that's a big deal. Anybody use Grok? So I use Grok on the PC all the time. I mean all the time. But the other day looked and Grok has an app for your phone, right? And you can talk to it and it has a really good interface so that you can just talk to it. The problem is when you push talk and you're talking to Grok, it doesn't stop listening until you hit the button again. So it may stop talking, but it's still listening. And then it's picking up everything that you're talking about. So just be mindful of that, right? But it is I use it when I'm gaming. I trying to figure out a puzzle or something. I stop and I talk to Grok, get some answers, and I go back to it. And it does okay. It's not really good at gaming stuff. It's fantastic when it comes to trading. I don't ask it what to trade, but I'll ask, hey, how was this company's earnings? And then how was that earnings compared to the last earnings? Or what's it been over the last four earnings? I'm just looking for information to make a more informed decision. So when it comes to AI, while I don't look for trades from it, yeah, I really like Grok. I don't ask it for trades, but I do get a lot of really good background on stocks. And if I see headlines say something about bonds, treasuries, anything like coming out of the Fed, if I don't understand the impact, I just copy it, throw it to Grok, and ask him to lay it out for me. Like, hey, give me some background on this. I haven't tried Perplexity. Is that Google or Meta? What is Perplexity? Yeah, that sounds right. Gemini. Perplexity AI. Oh, GPT? They actually gave it a name now, huh? Instead of GPT. I assume they're on the App Store too. Yeah, they're on the App Store. So, take advantage of these, right? Because while they're not what I would ever recommend to get trades from, it fits into what we were just talking about how we got to learn if we're going to be successful traders. Trading successfully simply from paper trading is not going to work, but learning and then applying that learning on paper trades, that gets you there. I'm going to keep this one around and hit it up, see how well it does. Any of you guys use Raindrop? It is a website database. You store your website links in it. Ooh, Perplexity Labs. I wonder what that is. I will check this out because I don't know anything about it yet. I assume I can start with free and upgrade later. So I'll just do that. So Raindrop IO is where I store websites, right? This. So you you give it a file name on the side, and then you grab links that you don't want to lose or whatever, and you stick it in there. So market news, for an example, these are all different market news websites, or discords. All these are different Discord sites, trading groups. If I go to a website and I'm like, oh, this is cool, I got to keep this, I put it in here, right? Rather than sticking it in my browser, because I use multiple browsers. And if I store it on one site, but I didn't store it on another browser, then like you lose track of it. So this is an aggregator for web links. And I do have a link to it on my browser as well. So if I go back to my browser, right, I look up at the top, I've got Raindrop up here, and I can, sign in, log in, whatever. I use Raindrop to save web links so that I don't forget web pages that I want. And of course, you can add notes to it. You can search your links, you know. I didn't know you could make a folder, but yeah, more and more browsers are doing this, right? But this has been around for a while. Um, it's funny, I was talking to AI today about browsers because I was looking for three categories. One, streamlined, basically naked. It only does browsing and it has really strong encryption and safety. Then I wanted ones that were like pimped out, top of the line, has everything in it you could want, plus some that are really kind of heavy, bloated, maybe a little squishy on the computer. And then ones that you could just run like everyday sort of browsing. And you'd be surprised. I got some pretty good names that I hadn't heard of. So that was interesting. I got to dig through those now because I use two. exclusively, and it's Edge and Opera GX. That's the two that I use. Opera GX has got built-in VPN, so I like this one. That doesn't make it fast, right? VPN kind of slows you down a little, but it has Bitcoin wallet built into it, and then the sidebars are just fantastic. Lots of customization on Opera GX. So I use this a lot, and then of course Edge, Microsoft Edge, I use all the time, and I've got a Microsoft Business account and I've got a Google One account. So of course I'm going to run browsers that do that. And yeah, Opera or Raindrop, I love that thing. It's a go-to for me. I looked at password managers today, ones that were key safe, passkey safe, or passkey accessible. New browsers, new email providers that are top of the line. It's been a busy day when it comes to just the background stuff. I love it when it pops up and says, "Was that you?" when you're trying to sign into something. Are you you? Yes, I'm me. 5-step process to get signed into Perplexity, but I finally got there. All right, I'm on it. Hey, I wasn't talking to you. Go away. I have to check that Perplexity. It was already listening. I had LastPass for a long time, and then they had that big hack happen, and then I've been shopping around. Today, as a matter of fact, LastPass got Passkey. It was in their updates that they now have Passkey. But all those guys, they're good until they're not, right? They got hit and then they weren't good. But if you were sharing passwords with family or you had clients and you wanted to share the passwords, LastPass was my go-to for that. That way you could give somebody access to something and they would never actually get your passwords. They were great until they weren't. So, yeah, we didn't really get much done when it comes to looking around the market, but we covered the questions that was in the chat, and I didn't want to start any new trades. We need to get through this OPEX before we do anything else. But I think it was productive anyways, because sharing apps, sharing ideas, that's that's always a good one. Bitwarden, that was on the list. Um, that was high on the list, by the way. It was listed as a top open source option with a generous free plan that includes unlimited password storage and cross device synchronization. Yep, that was a good one. I had this other one. Let me see the name of it. Um, Dash Lane. I had Dash Lane for a long time, and then they went wonky on me for some reason, and I booted them. But that was like, I don't know, 4 or 5 years ago, maybe a little longer than that. It was frustrating as hell because they were my go-to, and then when they just like, I don't know, pooped the bed, fell out of bed, say it however you want, I dumped them. I was so frustrated because all my stuff was in Dash Lane, and then I had to start over again. The top one was Nord Pass and Proton Pass. I don't know anything about either one of those two, but they were high up on the list. And one password, but that one was only because of frequent travelers travel mode. Guys, I hope everybody has a good weekend. If you have topics that you want to hit, or oh hey, exhausted trader, I just seen your post had gotten blocked. It thought you was trying to post spam or something. I'm gonna copy it for you and put it in the chat. Um, you didn't post anything wrong. I want to make sure you understand that you didn't do anything wrong, right? It mistook your post, so it blocked it. But this was posted earlier. Um, that's from Exhausted Trader. He was trying to share that. I'm telling you, I really like JLBY. I've got stock in all of those. Not a lot in some of them. You know what I mean? Like I'm not big position size in all of them, but like JLBY, I got in that back in November, and you can see, like where were we in November, all the way back here. I'm comfortable, but I don't want to give up, $16 to go back down to 10. Right? But I got into a lot of those guys back in September, October, November, December. I got in a lot of that. So I've been dancing around with it, and with my public app, I've been adding in. So on some of these, my average share price has climbed up with the stock. You guys use public? That's a pretty good broker, all things considered. It's not a trader, right? You definitely don't want to use it for trading. And I just took a withdrawal out of my public today, because I grew it up to nearly $2,000. So, oh, the withdrawal hasn't hit yet, but I got money coming out of it. Um, I grew this thing from a little bitty baby. This is awesome for set it and forget it buying. I tell it what I want to buy, and then every week it reaches out to the bank and grabs that money and buys that stock. Not very much, right? If you saw those numbers, it's buying like $15 here, $25 there, but it's just me testing out another broker. That one is, I don't want to say smart, but it is self active. You tell it what you want, and it does that every day, every week, every month, whatever you tell it to do. Build your own thematic play or your own basket of stocks. It'll reach out and buy those. And if you don't want to build your own, it has baskets already built. Um, it does income trades if you want to do like, just collect interest. You can do bonds, stocks, options. I don't do any options. I'm interested in its covered calls since it's a quote smart system, but I haven't checked it out yet. That's called public, by the way. It's what I refer my family members to when they say they want to get started in stocks, and I've tried to get them to teach them to trade, and they don't want to trade. They just want to invest. So if they want to invest, they can do that. All right. Work is getting done on the Discord. I told you guys I've got somebody going back over all of my live streams that are in the replay channel, and they are doing write-ups on the videos. So you'll be able to just do a keyword search in that channel and see if I have videos that cover the topic that you're looking for. It's not going to get done in one day, but they are working on it. So that's a good thing. Because we've covered a lot of topics in that replay channel, and they're just going to waste if nobody knows that they're there. You know what I mean? Because there's no descriptions on the videos. There's the bell. I'm really worried if this breaks 16 that we're going to go back to 10. As for that XLF trade, since we've rolled it, it's positive still, right? It's at like 12 bucks, and it's just a little bitty thing. So it's not going to make us, hundreds of dollars, but the trade is fine. We don't need to roll it or anything. It's not going to expire for another week at least. My SPY butterfly is now past 100%. I spent $2 on it. Excuse me, it's now past 50%. I spent $2. It's worth $3. It's made $120. I don't think you guys are in any of these others with me. I have an Intel call, but that's like a leap. So if you guys have topics that you want to cover, hit me up. If you guys, if you want to analyze charts or whatever, that's what we're here for. I stream Wednesdays and Fridays. So if you can't make it, I'll record it. Otherwise, guys, let's get the weekend started, and I will see you all on Monday.